Today, we're pulling back the curtain on Islamic finance. But this isn't just about money and markets. We're going to explore the ethical blueprint, the very DNA of a massive global industry. It's a system that's built on a really clear set of values, not just a bunch of rules.
And that brings us to this pretty provocative question, right? Can a bank actually have a conscience? I mean, it's a huge question, but the entire system we're talking about today is designed to try and answer yes to that by literally weaving ethics into the fabric of its operations.
All right, so here's how we're going to break it all down. First, we'll start with the two big ethical pillars that hold everything up. Then, we'll look at how those ideas are actually enforced inside a bank. After that, we'll zoom out to say who writes the global rulebook, and finally, we'll touch on the system of checks and balances that ties it all together. Okay, let's start at the very foundation, the ethical pillars. And I want to be clear, this is so much more than just a simple list of do's and don'ts. It's really a framework, with two different but related layers of thinking about what's right. The first pillar, the absolute baseline, is what's known as Halal. Think of this as the legal minimum. It's all about compliance with the core rules. So that means you have to avoid things like riba, which is interest, gharar, or too much uncertainty in contracts, and maisir, which is basically gambling. And of course, you have to steer clear of prohibited industries. This is the floor, the absolute non-negotiable standard.
But just meeting the minimum isn't the whole picture. That's where the second pillar, Thayyib, comes in. Thayyib asks a much deeper question. It asks, okay, this is allowed, but is it actually good? Is it wholesome? Is it pure? This is all about the overall quality and the positive ethical impact of an investment. It's not just about avoiding bad, it's about striving for excellence.
And when you put them side by side like this, the difference really pops. Halal is focused on the technical stuff, making sure the forbidden elements aren't there. But Thayyib is looking for the ethical impact, for the active presence of goodness and purity. I love this distinction. One is about the absence of harm, and the other is about the presence of benefit.
Here is probably the best analogy you'll ever hear for this. Halal is making sure meat is slaughtered according to the rules. That's the technical requirement. Thayyib is that same piece of meat also being organic, grass-fed, and free of antibiotics. One meets the standard, the other achieves the ideal. Makes perfect sense, right?
So you have these two really powerful ideas, Halal and Thayyib. But how on earth do you make sure a massive financial institution actually follows them? Well, that's where the bank's conscience comes in, the Sharia Supervisory Board.
So get this, every single Islamic financial institution is required to have one of these. It's called a Sharia Supervisory Board, or SSB for short. You can really think of them as the in-house ethical watchdogs. This board is made up of qualified Islamic scholars who are experts in commercial law. And, this is the crucial part, their rulings are totally binding. What they say goes. So what are they actually doing day to day? Well, it boils down to three main things. First, they review every single new product or transaction before it can ever be offered to the public. Second, they issue what are called fatwas. These are formal religious rulings on those financial products. And third, they're constantly conducting audits to make sure the bank is staying compliant over the long term.
And here's a really fascinating detail that shows how seriously this is taken. Let's say, despite all those checks, the bank accidentally makes some money that isn't compliant. What happens to it? They can't keep it as profit. That money is considered impure, and it has to be purified by donating it to charity. It's a powerful, built-in accountability mechanism.
Okay, so that's how it works inside one bank. But you've got this industry all over the world. To make that work, you need everyone playing by the same rules. That brings us to our next level up, the people who actually write the global rulebook.
At the very center of this is an organization called AAOFII. It's a bit of a mouthful. It stands for the Accounting and Auditing Organization for Islamic Financial Institutions. Basically, their whole job is to create a consistent set of standards for the entire industry, so that a compliant product in, say, Kuala Lumpur is understood in the exact same way as one in London.
And they're not new to this. They were set up way back in 1991 in Bahrain. And today, they've become the de facto regulatory backbone for Islamic finance all over the globe.
And the scope of their work is just massive. We're talking about more than 100 different standards. And it's not just about religious compliance. No, this is a whole framework that covers everything from accounting practices and auditing procedures to ethics and corporate governance. It's the whole shebang. Now, having standards is one thing, but making sure these banks are financially sound and stable is a whole other challenge. And that leads us to the final piece of the puzzle,
the system of checks that's all about regulation and managing risk.
For that, we need to look at the IFSB, the Islamic Financial Services Board. So if you think of AAOIFI as writing the rulebook for what's compliant, the IFSB focuses on what's safe. They deal with something called prudential standards, which is just a fancy way of talking about risk management and making sure banks have enough capital set aside for a rainy day.
The IFSB was set up in 2002 with a really specific mission: to act as a bridge. It takes those big global banking regulations, you might have heard of Basel III, and it adapts them for the unique kinds of risks you find in Islamic finance, like how to properly manage profit-sharing investment accounts, for example.
And finally, all these global standards get put into action on the ground by national central banks. Regulators in places like Malaysia, Pakistan, and Bahrain take these principles and build their own specific legal frameworks. They set up special departments just for Islamic banking and often create national-level Sharia councils whose decisions become the law of the land for every bank in the country.
So when you step back and look at the whole thing, from these deep ethical principles like Halal and Thayyib, all the way up through internal boards, global standard setters, and national regulators, it's a pretty incredible structure. It's a real-world model for building a conscience directly into an industry. And that leaves us with a pretty big final thought. What could other industries, maybe even all industries, learn from a framework like this?